The crypto market is pumping. Tech is pumping. We have Fed governors saying that they think that we are done with rate cuts because inflation is coming down. We'll be discussing that and much, much more today on Money Never Sleeps. Thank you for joining us today, everybody. Before we get going, you know the deal. Hit that like button. Subscribe to the channel if you haven't yet. Nothing that Kevin or I say is financial advice. Please do your own research before making any buys or sells in the markets. Kevin, how are we doing today?
As well as I can be for the amount of confusing, conflicting, and absolute asinine theories that I'm seeing all across Twitter and on CNBC. But I'm doing okay. I think that I'm getting clarity in the markets from how crazy things have been. And that's really all we really want, because right now we don't have much of that in terms of people that are telling us that. So I think I'm doing pretty well given the circumstances. How are you doing today, J-Web?
I'm doing pretty good. The market is, we're seeing a bunch of green out there in crypto. I don't have any Coinbase stock. So because of that, I feel like a big old dum-dum. But otherwise, life is good. I have nothing to complain about. I'm excited to kind of talk about what's going on in the markets, because we're seeing, a little bit of a buyback from yesterday's very minor sell-off. Some stock, Nvidia is continuing a little bit of a downtrend here. No big deal, no sweat off my back. But some of the tech is sector is starting to get bought back a little bit today. Seeing some issues with the Cybertruck and concerns there, but you know what? No one cares. Tesla is still up almost $10 on the day, just over 4%. It's
Damn.
We could be seeing a little end of year rally at this point. I've seen some of the Fed members, in summaries of their comments today, stating that they think we're in the right direction when it comes to inflation, and even the most hawkish of members are starting to believe that maybe they're done raising rates. They can stand pat for a few more meetings and then begin to cut. As we've said in the past, and we will say again in the future, I am sure we've seen from historical data, and I don't have a reason for this to change, that the big crash in the market and the big drawdown in the market happens after they pivot on the rate cuts. So
sometimes,
am I feeling? I mean, so yeah.
1987.
Huh?
1987.
Yeah.
Sometimes they break stuff too quick.
Yeah. So we don't want that. Now, maybe this time, listen, they've defied expectations so far. We're seeing this very soft, gentle landing coming in, and no one thought that was possible. More and more people are saying it's going to happen. People are also stating that we're no longer going to see a recession. I know that you disagree, and I would love for you to share your talking points on that right now.
Yeah, man. I think first thing that I'm going to pull up is the bond market, because this is something that I found really interesting last night. We saw a pretty good spike up in the bonds, right? I'm pulling up CNBC right now. This is what the current yields are. And you can see that they're all down in the red, and equities are up. So it's really interesting to see that the yields are down, right? That they're also down with equities being up, because you'd think that, okay, that means that there's less demand for bonds. People aren't going to be buying them, but we can definitely see that there's people buying them because the yields are coming down, and they came down pretty hard. So there's two things that it could be. I think that one, people just want, stable income right now. Maybe they're preparing for something just in case. I think equities are extremely overweight here. We talked about this, how overbought they are on the monthly, even though we had that few, I'd say 8 to 10 weeks down in the stock market, still extremely overbought on the monthly and the weekly. Weekly, we're right back in the overbought territory. So the other thing that this is the bond market is pricing in a possible recession, and they're locking in that percentage rate early on, right? That's my theory. I think that's what we're seeing here. I do have a problem with a lot of what's going on in the world right now, especially when it comes to gold as well. I mean, we got to pull this up. But gold is not an indicator of, a bull market. It never tends to be. But what I'm seeing here is, let me just pull this up real quick. Sorry, I got people working outside. Yeah, this is gold right here. We can see that it's up 27, almost $28 today per ounce of gold. And that's a huge move up. This doesn't tell me that people are risk off. I mean, risk on. This tells me that people are trying to get risk off, right? I'm really concerned about what's going on in that market. Hold on 1 second. Sorry about that. Yeah,
No
this is what I'm seeing here with gold. Sorry, I just lost my fucking train of thought. I was talking about gold, and it's at 2041. Obviously, it's pushing up. I was telling you before the show that Peter Schiff thinks that gold here is going to start taking off and inflation is going to be to a point where it's going to go into hyperinflation. I don't necessarily believe that. I think we're in a deflationary period, and I think that the bond market is pretty much pricing in that we are going to see a recession next year. We do know that recessions are deflationary by nature, right? People aren't buying, they aren't spending, therefore the currencies do tend to go up. And I think that's why we're seeing gold go up here a little bit. And then we're seeing the dollar kind of trail here. But here's the thing with the dollar. I see a bear flag right here, or a bull flag. Obviously, it's not a bearish channel right here, but it's, it's still set up for, a bullish move to the upside, in my opinion. We look at the stochastic RSI, it's extremely low. We look at the weekly, we're completely oversold. And if we look at the monthly, we still got plenty of room to the upside. And, monthly closes in a few days from now. I mean, this is probably going to come back down here, and we're just going to stay in the oversold territory. But there's a good chance that by, next year, we're going to start seeing a lot of this start to rebound, in my opinion, especially if people start to sell off equities. I think people are going to be rushing to the exits, looking for dollars. And a lot of the things I've been talking about on the show for a couple of days now, it's, we're talking about debt, and we're in a debt-based economy. I mean, if you're going to pay off your debts, and we know that there's a lot of them, and it's just racking up from consumers to nations, I mean, it's going to be to the point where you're going to need some type of currency to pay off that debt, right? And you tend to see that paid off when the rates are fairly high, but there's so much debt that's currently out there right now, they're going to have to pay it off in some way. But let me just pull up this. This is the overnight reverse repo, which is really interesting too, because we talk about, we're in a period of quantitative tightening, but this is kind of pointing that we're not necessarily, that there's still a little bit of liquidity out there, but they're still trying to grab it in every way possible. So yesterday I talked about the bank term funding program, and now this is the overnight repo repurchase agreements. This is Treasury securities sold by the Federal Reserve in temporary open market operations. Think of this as, the Fed pretty much buying, any securities or loaning money out to people, and then they just pay it back at some later date, kind of like how a pawn shop would work, right? But we could see that since May of 2023, it's been dropping significantly, right? It's kind of flatlining up here. And then since, like May 5th, 2023, you can see that it was at billions of dollars, I don't know how to, I always forget how this is. It's either $220 billion or it's, it's got to be $220 billion, the way I'm looking at this. But we come down here and we can see where we currently are. We're sitting at 873. So I would assume that's 873 billion. So this got to be trillion up here. So there's tons of money that's just absolutely leaving the markets. And this is pretty much just being eaten up by the banks, in my opinion. I think that's just showing you that they're hoarding cash. And once this operation completely goes to zero, that's probably going to be the end when there is no more quantitative easing that is in the market. Again, bank term funding program probably going to end in March. This looks like it's going to be, bled dry by the time we get to February to April. So around that time of the year, we're probably going to see a lot of liquidity dry up in the markets. We're also going to be getting a lot of those Q1 earnings of next year, right around, April, May, that period of time. So those earnings come back terrible, and we start to see that liquidity is an issue globally. And we're seeing all these countries that are, defaulting on debt. We're starting to see bankruptcies, delinquencies, stuff like that start to pile up. There's a good chance that that's the recession right there. I think it's going to be a credit and debt-based recession, something that causes the markets to absolutely tank. But I think this is kind of gearing up for what we're going to see in 2024. So I think the bond market has it right now. I don't think the stock market is right in any way. We're just seeing this rally going into it. We saw a rally back in 2008, very similar to it. And then it started to tail off, making lower highs, lower lows. And then eventually we just see just the cliff, something breaks to the point where it just goes down. There was a guy that was talking on CNBC yesterday. He was a really smart guy. His name is Komal Sri-Kumar. And let me just pull up this thing that he said on Twitter. It's really interesting. He was talking about how he thinks there's a good chance that because the Fed has absolutely no foresight into what's going on, they actually have lost this battle. His base case is something breaks in the next 3 months. And that's his base case. And this guy is, he's a macro analyst. I kind of agree with him that we are going to see something break. I don't necessarily think it's going to cause the market to crash instantly. I do think it's going to cause liquidity to start being, the most important thing in this market, dollars, right? So him saying this is necessarily, I wouldn't say this is a bearish thing or a bullish thing. I just think it's a good thing to keep in mind. And when we look at, liquidity across all markets, it's the dollars that everyone's trying to get a hold of right now. So if we start to see the dollar reverse in the next few months, probably closer towards the beginning of the year, I would say watch out. There's a good chance that the dollar against equities is going to start to rise. Maybe gold tanks a little bit, but post recession, anything like that, gold might continue to rise up like we saw in 2008, all the way to 2011, 2013. So that's kind of a long winded answer for why I think that we are going into a recession. But this is probably my most conservative thing, thinking that's what's going to cause it. And I think it's 100% that both at, the corporate, the federal, global level, for all of these people that have absolutely just accumulated so much debt. You borrow a treasury, you buy a treasury at 0%, then it goes up to 2%. Well, now you can get the same amount of money yield for half the cost. Well, of course, that's going to cause a lot of people to sell off at a loss. So I think that's going to be the main issue why people are going to necessarily want liquidity. And then obviously people are going to start losing their jobs. Next Friday, the most important data set, I think, out of anything is going to be unemployment. Because if we see that above 4%, I guarantee you that we're going to start seeing that climb higher and higher to the point where, a year from now, where we see the peak of it, is probably going to be, it could be anywhere in the 7s to 8s, possibly a year from after the initial crash. But I think we're leading into that, and it's ramping up quite fast, in my opinion.
Okay. Anything else when it comes to that you feel is actionable at this point, or is it mainly just continue to be patient, stack cash, minimize your liabilities, and give yourself the best opportunity to accumulate as many assets as possible over the coming, let's say, year?
Yeah, man. I can't sit here and tell you one asset. I mean, other than the dollar, which I'm bullish on, but you don't necessarily need to have exposure to a bullish dollar fund or anything like that. You could just stack cash, because I think that capital is going to be the most important thing that anyone's going to want, especially when the market's, down. In the past few recessions, it's been like 50 to 55%, the market drops. It's if you have cash on hand, something that other people don't, and we know that you're not going to be able to borrow from banks at all. It's going to be super tight credit lending, right? The lines of credit are drying up globally right now, domestically too. That's why we're seeing things like a firm absolutely take off, because people need to be buying things. They don't have the funds to do it on hand. They don't have the credit to do it either. So I think the dollar is ultimately the best asset that you can get your exposure to. I hate to say that because it's so boring, but if you can get those yields, like you were talking about yesterday, 5% for right now, make a little bit of cash on the side, have your money work for you. It's not a terrible idea. I think that if you want to be more risk on and looking at options and stuff like that, that's a little bit more dangerous. If that's the case, I urge everyone to think further out than you anticipate. That's my base case. Like if you're thinking, okay, we start to see the crash Q1, end of Q1 into Q2, I would think maybe a year or a few months after that, even further, just to prevent anything bad from happening. Maximize pretty much any of your contracts. So that's what I'm personally doing, just stacking cash and then buying further outlook contracts in the 2025, even into 2026, just to hedge your bets, and see, things come to fruition. I can't tell you to buy stocks. I can't tell you to buy crypto, because I personally do not think that any of those are good fits for me right now. And I think that we're getting extremely overweight in the market in equities.
All right, let's dive into some of the charts then. There's something I noticed, and this is, not like an unusual thing, but something I wanted to get your take on. So let's get to the ETH chart eventually.
Yeah.
You can start wherever you want to, though. If it's the dollar, if it's VIX, if it's Bitcoin, wherever
VIX. You mean the VIX, which is pretty much going bankrupt at this point. I say that just because how much they've crushed the VIX. It's absolutely insane. Let's just start with the regular TradFi indexes, go through them really fast, because there's a lot of crazy shit happening on these charts. And like I said, these are all of the gaps that we've created to the upside, and we can see that we're extremely overbought. December 8th, that's the key date. That's unemployment. And that's also the date that the buyback window for these stocks ends. But to look at this, we started to find resistance right here on this trend line, right? This white trend line that, here's the height here, seeing if we can create a top here. I mean, that would be ideal if if we really do believe that things are going to get worse. They would like to, it would like to stop here, but there's a good chance that it could break above it and a fake out and then go below it. But, you know, it's obviously been a top across. But if we look at this on the 5-minute chart, and this is such a stupid chart to look at, but I think it's important in this case, we can see the volatility that we had today in this market. We went all the way down and filled this gap, this blue gap down here. So that was the first one that we have filled to the downside since this massive move up. Let's get rid of that. But we could see that we cleared that. Then we shot all the way up to this trend line, got rejected, came back down, and now we're just right back to kind of where we were, you know, Monday right before close. So it's really wild how volatile that is. And the interesting thing to me is that if we look at the NASDAQ, pull up the NASDAQ if it goes there, very similar too on the 5-minute charts. It's starting to get more volatile back and forth in directions. It's actually tradable. If you look at it back here, I mean, guys, this is just up only every time the market opened on the morning, right? It just after hours just kept pushing up. You know, futures just kept pushing this thing up. You look at the Dow, I mean, it's very hard to trade something like that when it's just up only, right? So I think that you're starting to see some bulls and bears get in near the top, which tells me that we are getting close to a top. And I think that also lines up with what we're seeing with these buyback windows. I think a lot of people like Goldman Sachs, these investment banks are getting out. They're selling in the futures markets, and now we're starting to see some of retail and some of these hedge funds, these traders who've been chasing the CTAs, who dumped $95 billion into the market since the beginning of this move to the upside, are chasing this market thing, and it's going higher. I don't necessarily think that's going to last very long, but we have a ton of gaps to the downside. We've been talking about that. You can see that we're extremely overbought. I think that if we continue to see, you know, any further price push up, maybe we get a double top here. But I think that there are a lot of extremely obnoxious and extremely bullish ideas that we're going to keep pushing up into all-time highs. And when you start hearing that at the top, that usually is a sign that things are probably going to change, given what everyone's sentiment is. I think the machines are going to change over and switch over to the point where it's like, okay, now we're going to sell. And now what they did to the upside, everyone's going to do to the downside, and they probably are going to chase it. So I do think we're going to start filling out some of these, something to keep in mind. The dollar, like I said, we're in this channel. It keeps pushing down. We're a little bit below it. I want to see this in the weekly close, because the weekly close obviously is the most important. We've definitely wicked below it before, and then we bounced out of it. But we do definitely need to see some move to the upside fairly soon, or some consolidation that shows us that, okay, we're going to start to make another run for it. When I look at this, I think of this as, you know, conservative right now. It looks like a simple ABC correction. Something like that would be nice. I think it could possibly even go higher if our thesis that we're going into a deflationary period, recession's around the corner. We have to keep an eye on that. But, you know, obviously we have the 200 EMA down here. We can still find support on that. But the dollar's been getting crushed extremely hard lately, and a lot of that has to do with foreign currencies as well. We can see that the yen itself, here is it. Yeah, the yen obviously tailing down against the dollar. I mean, it's getting stronger against the dollar. However, we saw that they did get a hot inflation print. So I'm not necessarily concerned that the yen is going to go down significantly. And again, we know that Japan, China, all their debt, they want to pay it back. They're not going to want to pay it back in an inflationary currency like the yen or the yuan for the time being. They're going to want in the dollar. I think that's going to cause the dollar to spike up. But again, that would require some type of break in the system in their respective economies. You know, other than that, VIX, it's stupid how low it is right now. I mean, they absolutely crushed it for how little the S&P actually traded some days. The days with the lowest amount of volatility, it crushed the most significantly. And we're looking at this here, and, you know, people are saying that the VIX is going to take off. You know, I genuinely do believe that. But, you know, exposure to some of these ETFs, the liquidity is just going to dry up while people do the inverse and short it. So that's kind of what happened with the UVIX, and it's happened to in a lot of other ones. So that's why I'm very cautious when I tell people, you know, finding exposure to this. It's kind of a dangerous game. And here's the thing, we're at the lowest we've been since COVID. As if we look at COVID where it was, you know, that's a pretty good consolidation period, right? You know, from November, October, so that's roughly 3 months, 4 months almost. It was, you know, trading around 12 to 14. I mean, we could do the same thing, and that kind of puts us right towards the end of Q1, you know, where we start to see some negative things come through. I think that Q4's earnings aren't going to be great. They're not going to be terrible. That scares the market, but it's not going to be great for maybe some of the bigger companies. You know, retailers might do well because Christmas, if we want to make that argument, but I don't necessarily believe it. But we're also seeing some weird stuff happening down here. Look at this glitch we got today on the VIX. And I count this as a real thing because I looked at the chart, and sure, the S&P was down, but it wasn't down significantly to the point where there was no reason why this thing just shot up consistently. So what this tells me is that someone is buying VIX calls or VIX options and they're just trying to get as much volume possibly in on the VIX for the time being, and that just caused the spike to go up, even though it wasn't necessarily that great of a move to the upside or to the downside for the S&P. So it's very concerning in my opinion. That's really all I had for TradFi and the major indexes. If you want to take a look at Coinbase or Tesla right now, we could do that as well, just because they're having pretty good days.
I mean, let's look at Coinbase. Like we can go through it pretty quick, but
Yeah,
I mean, if you just it's just been an absolute piss missile.
we need to, yeah. Look at that.
Look at the daily on this thing since October 27th. It's up 82%. Like that's nuts. Absolutely wild what we're seeing. And over the last week, it's been, really, really crazy. Like this is, it's as oversold as overbought. I'm sorry. It's as overbought as possible. It's been hanging up there since what, Wednesday, the 8th of this month. So, we're coming up on 3 weeks of being extremely overbought, but you know what? The market doesn't care. It's going to keep going up for the time being. And we'll have to see if there's a correction coming.
Yeah, man. I'm not going to say anything bad about Coinbase because I think that they are going to be the U.S. exchange. I think they're going to be the #1 exchange given what's happened recently. And it's just a matter of time before they do. Obviously, we're going to see a lot of adoption after this ETF gets approved. I don't think it's happening anytime soon until, who's got to still come down. But if we look at this chart, I mean, this trade's pretty much, on par with Bitcoin, right? I don't think anyone would disagree with that. We see the spikes when Bitcoin goes up and we see the dumps when Bitcoin goes down. My biggest concern with this is again, one massive bear flag. It is. It's, putting higher highs and higher lows. But look how overextended it really does get. And I mean, even if we look at this back in July, the XRP pump, it came down significantly. I mean, it didn't come down all the way, making a lower low, but it definitely came down roughly, 38% from this high up here at $114. I mean, sitting at 128 right now, it's getting close to the end of there. Extremely overbought on the daily. If we look at the weekly, extremely overbought. If we look at the monthly, extremely overbought. I saw Scott Melker, who is, the Wolf of Wall Streets. Some people like him, some people hate him. I thought he put out something ridiculous saying that Coinbase is going to $200 and there's no resistance in the way between now and then. I'm trying to be reasonable here, guys. I think that a lot of what we're seeing really does depend on Bitcoin's price and crypto's price. Obviously, Bitcoin, which I believe has been fraudulently pushed up this entire year, the SEC, thinks it has been too. BlackRock thinks that stablecoins have pushed this price up significantly to the upside, and it's absolutely manipulated the price, which I do believe. What happens if we find out something that, oh, shit, it actually was? Does that mean, is this justified everything that we've seen to the upside? I don't think so. I think that we start to see a massive sell-off. And even when I look at this on the monthly, the volumes, it's very similar to what we saw against Bitcoin. Volumes are dropping off from, this low. January 2023, people started buying. Okay, this is maybe some natural buys. Later on, Bitcoin started shooting up, artificially. Maybe some people bought there. This massive move to the upside here on this monthly. Low volume still leading into that. So I think that we're seeing bearish divergence on the macro. Yeah, we're having a good month here. We're up, 66% this month? I mean, if you got in on that trade, congrats. But eventually this thing I do think is going to break down. A lot of people are excited about Coinbase, think they're going to be the #1 because of all the Binance news that's kind of helped us out. Obviously, Binance is a part of the reason why this is also pushing up, right? They're seeing more volumes and trading, prices up high. And the ETF doesn't hurt it one bit, but I don't know. This eventually is going to lead to a breakdown, in my opinion, at least to the origin of this, which is roughly around $33 or so. I mean, I think we're going to probably test $47 to $33 and then see where we get there. But there's a good chance that we haven't seen the low for Coinbase in its history yet. I mean, it's very possible we still go down here. It still hasn't invalidated this move to the upside. It would have to go higher than they have to go to $201 to invalidate this 5-way move to the downside. So that's what we want to see. Anything below 200. We're still in this bearish channel. Eventually it's going to come down, but I don't know. I just can't see touching the top of this parallel channel and getting excited here, just personally.
All right. Let's get into quickly just a couple of crypto charts, and then we are going to wrap it up.
Absolutely. Bitcoin dominance. We're back, right? Look at that. We're above 38,000 for Bitcoin, and Bitcoin dominance has a huge gap up today. It's up, it's only up 0.67, but 53% hasn't been seen in quite some time. Arguably right here around November 9th, I would say. November 9th would be the last time. So not too long ago, but it seemed like Bitcoin dominance was tanking as alt started taking off. We saw a lot of that, USDT pump really did help Bitcoin, but it killed the dominance because now, we saw a ton of money go flying into Solana, BNB. Absolutely. Again, if people forget, BNB's market cap still, even after everything is up, it's $35 billion. It's a huge huge chunk of the market cap of all of crypto. So yeah, Bitcoin dominance is going up here. I wouldn't be surprised if it continues to go up. I think that even if it'll go up, even if Bitcoin does start to take a dump here. And if we look at this, I can't guarantee you that this is any type of structure. This looks so unstable right here. This massive parallel channel that it's putting up on the daily. So I said that there was a good chance that we could get another pump up to that 38.5. We haven't got
right. By the way, we are so fucking back.
I guess we are. I'll take his word for it. Also take every other person's word for it that's got laser eyes on Twitter. I never understood the laser eyes, man. Just dumb. Maybe I'm just black pilled at this point with this market, but this is hilarious seeing this, and people are telling me that it's going to 40, it's going to even 48. I'm like, I don't know. This part right here where we are at 38K seems very similar to when we were back at 48K. That's just my opinion, right? We were in a parallel channel. People were getting really excited. I was looking at the market and I was about to short VeChain at the time. That was like one of my first shorts in the market. I was like, you know what? There's a good chance this is probably going to come down. Let me get out of the market. I did. And then next thing you know, April came along, and then we started seeing Terra Luna and 3 Arrows Capital and all that shit played out there. I think that sentiment here, people were thinking that we cooled off from this move to the upside, is the same exact thing that we're seeing up here. But again, we're still putting in a lower high. I don't think we're going to come up to 48K unless they print trillions of dollars worth of tether. But I think that this is unstable, and this is showing you that right now, the fact that the price isn't pushing up faster from here and we're putting in this really unstable structure tells me that this is retail and they're distributing to them in this yellow zone here. Not the most bullish thing. Could it go up higher? Yeah, I mean, it could go to 40K. I will say that. But I think 38.5, if that gets tapped, which would be right around here, we could see it go to that 38.5 to 40,000, but I wouldn't expect it to last long. And I think a wick in there, maybe trade back down here. And then eventually, once we get nice and overbought on the daily, we might have to come down, test, 35, 33.5, somewhere in that range. So that's what I'm thinking for Bitcoin. We look at this on the macro, again, no different than what we saw from Coinbase, parallel channel, same dates that it pumped, same dates that it's pumping. It pumped here. Again, thank you, Tether. But let's look at some other ones that are really interesting. Let's look at Matic, actually, because we haven't seen this in a while. And we could see that on the daily, it's came down pretty good, right? Like, let's see this from the move all the way up to almost $1. It's currently trading at about 23%, almost 24% discount to that price that we saw back in the middle of November. And, what is this? 13 days later, we're down that much. Shows you that Bitcoin dominance is picking up, and some of these are starting to bleed out. But at the same time, this is a really good move to the upside. It didn't put in a higher high other than, where we were back here in roughly July of 2023, the XRP pump. So yeah, I think that this is a pretty good move to the upside. It's a nice correction, but I do think that this is another one that will eventually see more downside, especially if we look at this on the weekly. Yeah, the weekly is extremely overbought. And I think a lot of people also forget what happened back in August. This was it Monday? No, it was I think a Thursday. It was a Thursday in August where we saw the market absolutely dump because of Evergrande. Remember that when we thought we had to do an emergency show?
Yep. That was a wild day.
It was down 8.35% at the close. But I mean, if we look at this from where it was to where it went, it was down 17%. I keep telling everyone that there's a lot of problems in China. I wouldn't be surprised that their exposure could do something similar to that once again. I don't think it's going to be the reason why it dumps that much, but we do know that when it comes to liquidity and, crypto, trying to find it, there's a good chance that once things start becoming illiquid, the price starts moving way faster than you anticipate. So yeah, we're still at 75 cents right now. I think a lot of alts are also doing extremely well. Binance is doing pretty well today. It's up $3.2. Still within this, I gotta clear this up. This is madness here. Me trying to short fucking Binance after the collapse. I have no positions on it, but we can see that it broke out of this parallel channel, and it's probably going to be putting in a 5-way move down. I think this is wave 1, this is wave 2 somewhere. Maybe we're in the middle of wave 3. We have to see how this plays out. But right now, I think we're just seeing a little bit of euphoria in the crypto market. Everything's green. Bitcoin's kind of lifting everything up. We're seeing the stock market do fairly well. Eventually, I think this is going to give in. And, we're just going to be sitting here with assets that bleed out faster than they can than people will be willing to buy them. So that's the thing that I think we're going to be looking forward to going into the end of the year, into next year. Doesn't help all the uncertainty that we still have with Binance. I mean, the SEC said that they're trying to accuse them of something similar to FTX, which means that that would probably entail insolvency at some point. Now, that wasn't something CZ said, but it's something that we have to, acknowledge is a very real possibility. And insolvency is a liquidity issue. And again, the liquid markets move fast. We know that Tether might not be backed 1-to-1, so we have to keep an eye on that. I do want to pull up USDC because House sent me a really cool article yesterday showing that there is going to be some integration with USDC in Japan. So it looks like it's becoming more of a global payment method as well. It's just a nice thing to see because we do want to see a stable coin eventually that's stable. We don't want one that's manipulating the market. I think USDC has probably been the most transparent when it comes to their reports, considering we actually get reports from USDC, not like other stable coins. But I do think that's pretty interesting, and we just want to take a look at this compared to Tether. You can see that once Binance kind of got out of the game, you can see where USDC bounced, right? This was it was starting to pick up here. We knew that CZ kind of signed that deal a week prior to him, coming to the US to be booked. That's when it kind of stopped. November 14th, that was that Tuesday. And then the following Tuesday, where was it? It's the 21st. There we go. It's back up here. It hasn't been trading since. So it goes to show you that there is some correlation when it comes to manipulation in the markets. You have to understand that these things aren't always as they seem. And it's mind-numbing when you know that something is going a certain way, but just the price doesn't do the same thing. But eventually it will. You just kind of have to keep that in mind.
All right. Anything else before we wrap it up? I feel pretty good about what we touched on today. We'll have some more data coming out tomorrow with first round of GDP revisions, and we'll also get the Fed beige book. So I'll comb through that before we go before we have our show tomorrow.
What you sent me on the group chat today, consumers.
Yeah.
They can't afford. Yeah, can't afford a $2,000 emergency payment, most of them. And then I also saw today, 60% of Americans are living paycheck to paycheck. So there you go.
It's ugly, man. And people want to keep with this bullshit rhetoric that,
headlines are lying.
American families are better off than they were 4 years ago. And we all know what the driving force that is when it comes to election years. So fuck
Joe,
all
what he
that
said
noise.
yesterday? My favorite thing Joe Biden said. He said, this year is the 4th least expensive Thanksgiving in history. And then everyone at the table started clapping and smiling. And I'm like, it's a weird flex considering, inflation was at 9.1%. And we're starting to see people default on, I talked about it on Twitter last night, but it just follows on Twitter.
Before people think that I'm like some crazy conservative, I dislike pretty much all politicians. So this is not me being a Republican when I say that I hate Biden. I hate liars and politicians for the most part. So just want to put that out there.
No, I think a lot of people are going to feel that way next year, and it's going to be a painful year. I think. Just not even politics aside, it's going to be a painful year for everyone's pocket. And the thing I was looking at was that we're starting to see delinquencies rise up considerably. I think we're up, I want to say it's like to the point where we were at COVID, and it was like 9% or something like that they've been on the rise in the positive. So delinquencies are definitely rising from the year prior. Not a good sign. Once again, I don't know why we're just trying to, kid ourselves. Like they're telling the consumers, hey, consumers are really strong. They're doing extremely well. It's like, well, I'm not. Am I just fucking stupid? Like I don't understand the play here. It's so dumb. But again, there's cracks in the system. Eventually, it's gonna break through, and it's unfortunate it's gonna happen. But there's signs, guys. That's all I'm saying.
The levee will break, and Led Zeppelin wrote a great song about that. So go listen to that as you wrap up your Tuesday in the markets. If you have not yet, do us a favor, hit that like button, subscribe to the channel, drop a comment, share us out on social media, all that good stuff. We're coming up on the last month of the year. It's going to be a fun end, and I think we have a lot going into 2024 that we are going to be keeping our eyes on. So that'll do it for today. We'll be back tomorrow to talk the latest round of data, that Fed beige book, whatever else is happening in the markets. So until then, stay safe. Appreciate you all for being here with us, and we will see you next time.
Take care, everyone.